PCWM fam, this is the Price Action Junky here again on behalf of the Enlightened Wick Masters University with our second presentation in this beginner series curriculum. Now, in our very first presentation, we have briefly discussed what is Forex. I know that Forex stands for the foreign exchange market. We know that it deals with the back and forth price exchange of currencies that are determined by monetary policies. We know that it's a 24/5 market, and we know that it has a $6.6 trillion daily trading volume. Now, in this presentation, we're going to actually get specifically into what assets are actually transacted and traded on the foreign exchange market. And having an idea of what assets are actually transacted on this market will allow you to discern what markets that you want to actually deal with. Because, hey, maybe like the way a certain market moves as opposed to another. Maybe you notice a little more manipulation in this market as opposed to this other market. So just having these kind of ideas and knowing what's traded and how exactly is traded or exchanged, or transacted inside of this marketplace will give you a great idea in being able to determine all these things, guys. So again, this will not be a long drawn out video, guys. So make sure that you're being overly intentional and not taking it for granted. Have your pen and paper. If you're on the go, screen record, take your screenshots, do whatever you got to do. Feel free to pause, rewind as much as you need, guys. This video will always be here for you all to be able to reference back to. Let's go ahead and get started, guys. Let's talk about what is traded on the Forex market. Now, before we actually get into what specifically is transacted on the Forex market, we have to dive a little bit into who the market participants are, right? It's important to know who is actually transacting these assets and most importantly, why they're transacting any asset as well too, guys. This is all great information. So we know that first and foremost, these central banks, right, are the biggest players in the Forex market. Right, these central banks, now these are the market makers, guys. I'm not going to get too deep into market makers and central banks, not in this presentation, but we'll actually have a future presentation going over central banks and who the real market makers are. But the central banks, we know that they're the biggest players because they actually determine the price of these currencies. Right, we know that governments are also players in the Forex market as well too, because we know that governments, they have to borrow money, they have to lend money or may get financial aid to another country. And it's important for them to know the exchange rates, because in the instance where there are borrowing money, right, they need to know how much money of whatever country they're borrowing from. Need to know what the exchange rate is so they can know exactly specifically how much money they'll actually have to use. Right, if they're aiding in financial aid to another country, they need to know how much money they're going to be giving up, how much money they're going to need in order to cover the price differential or the exchange rate, right? So that the country that they're aiding, right, will be able to have X amount of money. We know that businesses also transact in the foreign exchange market when they're dealing with the international trade of goods and services, right? So if you've ever purchased something from outside of your country, 9.9.9 out of 10 times, right? I know I said that twice. The exchange rate was automatically calculated inside of your payment processor, right? So you didn't have to do pretty much any type of additional calculation unless you decided to go to Google, right, and look it up yourself, right? But businesses also need to know about the Forex exchange rates, especially when they're maybe importing goods, right? Because they're gonna need to know how much money they're gonna have to take of their currency, right? And know what the exchange rate, so they'll know how much money they're gonna ultimately be giving up in exchange for these goods that they're importing, right? And then vice versa when they are exporting goods. And we know that investors transact on the foreign exchange market too, right? And this is gonna be our category that we're in as investors and day traders. But we're gonna be transacting on the foreign exchange market in total speculation on the change of currency and asset prices. All right, so this is a brief overview of market participants. Now let's actually get into what's actually traded. So we know that different assets are transacted on the exchange market, right? And I say transacted because not everything is totally exchanged, right? And not everything is just bought or sold, right? So it's important to really be intentional with your terminology, because this is going to how you conceptualize the market. And then how you conceptualize the market is how you're going to actually participate in the market. All right. So we know that obviously currencies, right, are the biggest, the most transacted assets on the foreign exchange market, because this is the foreign exchange market. And we know that indices or indexes, right, like US 30 or JUR 30, which are sectors of stocks, are also transacted on the foreign exchange market. We know that we're dealing with a lot of cryptocurrencies, right? And they're not tangible assets, right? But they're still digital currencies. So we're going to treat them the same as regular currencies in a sense. And we're going to be transacting these assets as pairs of cryptos. We know that commodities and metals like oil and gold are transacted on the foreign exchange market, and commodities and metals, right? These are just primary and raw materials that are imported, exported, and exchanged on the foreign exchange market. And just like indexes, right? You have stocks, right? Indexes are sectors of stocks. Stocks are actual shares to a particular company, right? And these are all publicly traded companies like Apple and Tesla, and these are as well transacted on the foreign exchange market. So now, when we talk about the exchange of currency pairs, we're talking about the value of one asset in relation to another asset. So when we have two currencies, right? In this example, we're going to use the Australian dollar and the US dollar, right? Or AUD and USD. When they come together, they're going to go from two assets and merge into one single asset. So AUD, USD, AUD and USD is now one asset known as the Australian US dollar or the odd USD. And where AUD is going to be our quoted asset and the USD is going to be our base asset, right? So when you see quote and base, what you're saying is literally how it's written out. We're going to quote or see how much Australian dollar we can get based on the price of USD or the United States dollar. So when we actually read it out, right, the price of AUD USD is equivalent to 0.74. What you are actually reading is 1 Australian dollar is equivalent to 74 cents United States dollar. It's really, really simple, guys. Try not to overcomplicate it. I'm going to break it down in as simple fashion as I can. And don't worry if you didn't catch it on this very first example, because we have another one following up right here. So our second example, we're going to be using GBP and JPY, the Great British Pound and the Japanese Yen. And here we see that GBP is first, so GBP is our quoted currency. JPY is second, so JPY is our base currency. So again, we're going to be quoting or seeing how much Great British Pound we can get based on the price of JPY, the Japanese Yen. So when we read the price of GBP JPY is equal to 1.57, what we're actually saying is that 1 Great British Pound is equivalent to $1.57 of Japanese yen. These same concepts, guys, over and over again. You're going to see it as overstood and read across all of these different markets. So now, getting into crypto pairs, right? So again, like I just stated, we know that cryptocurrencies are not tangible currencies, right? It's not tangible money, but we know that it's still a digital asset and it's still a digital currency that we can still use depending on its use case and who allows us to use it, right? So crypto is also going to be read in the same fashion as regular fiat currencies. They're going to be read in the same fashion as pairs. So in this example, we're going to be using BTC or Bitcoin and USD or the United States dollar. So BTC is going to be our quoted currency, and the United States dollar is going to be our base currency. So we're going to be seeing how much Bitcoin we can get based on the price of the United States dollar. So when we read the price of BTC USD is equivalent to 61,000.75, what we're saying is that 1 Bitcoin is equivalent to 61,075 cents United States dollars. Same concepts, guys. Now, getting into commodities and metals, right? We're still dealing with the exchange of these currencies. And yes, in this instance, gold is going to be referred to as a currency, because when we're dealing with XAU, right, which is a code that's given to gold, right, to represent 1 ounce of gold or spot gold, this can still be traded, right? So in this example, we're going to be using XAU or spot gold and United States dollar, where XAU is going to be our quoted currency, right? And USD is going to be our base currency and asset. So we're going to quote how much spot gold we can get based on the price of the United States dollar, right? So we see the price of XAU is equal to USD $1,766.23. We're saying that 1 ounce of gold is equal to 1,766 United States dollars. So this is the fun fact that I just brought up a short second ago, right? The X in XAU represents the ISO or International Standardization Organization 4217 code for 1 troy ounce of gold, which denotes it as a currency, guys. So yes, XAU or spot gold is deemed a currency. It's not deemed an instrument or whatever everybody else thinks the X stands for. The X is literally the ISO 4217 code, denoting it as a currency. So we will treat spot gold like a currency. Now, getting into indices and indexes, right? These aren't per se traded on the foreign exchange market, because indices are just sectors of stocks. You know that stocks are just shares particular to one publicly traded company, right? But in this instance, we're going to be using US 30, right? Which is the list of top publicly traded stocks, the top 30 publicly traded companies in the United States. So when we see the price of US 30 is equal to 35,705.40. What we're saying is that one share of US 30, or the bid price or the price at position, is going to be $35,705.40. So again, we're not trading US 30 for anything, right? When you're in the stock market, you'll be purchasing a share, but dealing here in the foreign exchange market, what we're actually doing when we see US 30 is at this price and we're looking to buy or sell, we are paying for a position in the market. So this is the bid price or the price at position. Now, stocks is going to be the same exact thing. We're going to read it and understand stocks the same way we would do indexes and indices as well too, right? We know that in this example, we're going to be using Apple, right? So we're going to be looking at Apple and United States dollar, or excuse me, in regards to United States dollar, because we know that dealing in the foreign exchange market, it's an international marketplace, right? So it could be somebody in India right now looking to maybe purchase some Apple stocks as well, and they may not be on an actual stock platform, but hey, maybe on their dealer or their brokers in their MetaTrader 4 and MetaTrader 5, right? So when I actually see the price of Apple is equivalent to 144, what this is saying is that one Apple is equivalent to $144 USD. Now your brokers and whoever your dealers are should automatically have the differential, right, of price inside their actual inside the actual system, guys. So in this example, we're going to be using United States dollar because I'm in the United States, right? So when we say that Apple is 144 United States dollar, this is the price that you will be getting into Apple at whatever position that you're in, right? So if it's at $144, then you will place a position when Apple's at $144, depending if it buys or sells, you would expect to make more money, right? Depending if it goes up or down, guys. Same concepts, still simple. So let's get some key takeaways, guys. We know that currencies, indices, cryptocurrencies, commodities, metals, and stocks are all transacted on the foreign exchange market. They're not all traded, but they are all transacted on the foreign exchange market. All right, they're all going to be understood and read as pairs. We know that the first asset is equivalent to the quota asset, and the second asset is going to be equivalent to the base asset, right? And asset pairs read that one base asset is equivalent to X amount of units of the quota asset. Guys, that is going to be it for this what is traded on the Forex market.